Okay, here we go. We are diving deep today into what is, well, the world's most powerful currency, the US dollar.
Mhm.
For decades, it has felt like this financial bedrock,
Yeah.
unmoving, unquestionable. But the data from 2025, it told a really surprising story.
It really did.
A story that had the media shouting things like, the dollar is collapsing.
And the noise level was just incredible. So I think our mission today is to cut through some of that hysteria
Yeah.
and just pull out the facts for you. We need to answer two core questions. First, why did the dollar see such a swift, significant drop in 2025? And second, does this genuinely signal the end of its global dominance, its hegemony?
We have to start with the numbers because honestly, reading these data points from last year, my jaw dropped. We're looking at the dollar index, right? Which measures the dollar against its big competitors.
Like the euro, the yen, yeah.
At the start of 2025, that index was sitting pretty at around 110.
And by the end of the year, it had fallen to its lowest point of 96. That's a drop of nearly 15%.
15%. I mean, for a major reserve currency, that is enormous.
It's a huge devaluation.
So to make that a bit more tangible, let's look at some specific examples. Against the Mexican peso, the dollar fell from being worth 21 pesos.
Right, at its peak.
Down to about 18.5 pesos. That's a 12% shift in buying power right there.
And against the euro, where everyone always watches for that one-to-one parity, the shift was stark. 1 euro went from buying about $1.09 to $1.17.
That is such a swift and clear change.
Yeah.
It really shifts the dynamics of global exchange almost overnight. So what does this actually mean for you, our listener? I saw someone on social media say, the dollar collapse is my discount code. Is that the right way to see this?
Well, in the short term, absolutely.
Okay.
If you're holding euros or pesos, they suddenly buy a lot more dollars. So if you're traveling to the US or you're importing American products, you're basically getting them at a significant discount.
So it's great news for some, but I imagine it's terrifying for others who are worried about financial stability.
Exactly. It's a great vacation discount, but it does raise these huge systemic alarms.
Okay, so before we get into the geopolitical drama, we have to understand the core mechanics. What makes any currency go up or down?
It's the most foundational principle in all of economics, really.
Supply and demand?
Supply and demand. If the world is scrambling to get dollars and there aren't many to be had, the value goes up.
And if everyone's dumping them?
The value falls. Simple as that.
But the dollar isn't, corn or oil. It's backed by a country. So what are the elements that really drive supply and demand here? Our sources point to 4 key factors.
4 powerful levers. The first is inflation.
Okay.
Second, the actions of the Federal Reserve, the U.S. Central Bank.
Of the Fed.
Third, the overall political and economic environment.
Right.
And finally, the country's trade balance, so exports versus imports.
Okay, let's unpack the first couple of those technical reasons that really explain the sharp drop we saw. Let's start with inflation.
So think of high inflation as kind of like money pollution.
I like that.
When inflation is at, say, 10%, it means your dollar is losing 10% of its buying power every single year. So when investors feel that a currency is being polluted too quickly,
They get out.
they seek refuge somewhere else, gold, another currency. They sell their dollars, which increases the supply, and boom, demand drops.
They're essentially saying, I'm taking my money out before this thing melts.
Precisely. Now, U.S. inflation has been cited recently as being around 2.5 to 3%, which is low compared to the post-pandemic peak.
But the memory is still there.
The memory is there. Investor confidence is fragile, and that forces them to look very closely at the next factor, which is the big one.
The Federal Reserve, the ultimate power broker. How did their actions directly cause this decline in 2025?
Well, the Fed controls the central banking interest rates. This is basically the cost of money. It affects your mortgage, your credit card, everything.
Okay.
And the crucial rule is this: raising interest rates strengthens the dollar.
Because it makes holding dollars more attractive globally.
Exactly. It's like putting a higher yield on a super safe asset. It just sucks in capital from all over the world.
So if I'm a bank in Germany and I can suddenly earn 5% on U.S. Treasuries compared to what, 1% at home?
You're buying dollars. Demand goes through the roof.
Right.
But, and this is the key to 2025, the inverse is also true. The Fed has been lowering those interest rates lately.
To stimulate the U.S. economy.
Right, to ease borrowing costs at home. But the global consequence is that those high-yield assets suddenly look way less appealing. So capital flows out, supply goes up, and the dollar weakens.
So a domestic stimulus has this immediate global effect. But while the Fed is pulling these technical levers, there's this elephant in the room. The state of U.S. government finances. That's factor 3.
It is. A currency is ultimately backed by confidence. Confidence in the stability of the government that issues it.
And a big part of that is how it manages its money.
A huge part. And when a government is constantly spending more than it takes in running a chronic deficit, piling up debt, investors get nervous.
It's like a credit card bill that just keeps getting bigger and bigger.
Exactly. And our sources confirm this anxiety is a specific reason for the dollar's recent weakness. The U.S. government's finances are cited as worsening, with record-breaking debt levels.
With no signs of slowing down.
No signs at all. And this suggests to foreign investors that maybe, just maybe, the U.S. will eventually have to, put money to pay its bills.
Which would devalue the currency even more.
And that perceived risk, that mismanagement, it drives capital away. It absolutely accelerated the decline we saw in 2025.
So just to recap the short-term reasons, the Fed lowered rates, making the dollar less attractive, and investors are getting really worried about the U.S. government's massive debt.
That's the snapshot. And now we have to bring in factor 4, the trade balance, because this ties into the dollar's really unique structural role in the world.
Okay, trade balance is pretty straightforward, right? Exports versus imports.
Yeah. If you sell more than you buy, a surplus, your currency gets stronger. If you buy more than you sell, a deficit, it gets weaker.
And the U.S. has had a massive chronic deficit for decades.
For decades. So in pure economic theory, that should mean the U.S. is constantly flooding the world with dollars to pay for foreign goods.
And that huge supply of dollars floating around outside the U.S. should make it weaker.
It should, consistently. But for decades, the dollar has just defied economic gravity. It stayed stubbornly strong.
So how did it turn gravity off?
This is its unique advantage, its status as the world reserve currency.
This means other countries just have to have dollars.
They have to. Regardless of what the U.S. economy is doing, they need dollars to conduct essential international trade.
So it's like a structural necessity.
Precisely. Imagine the whole world runs on oil, and the only gas pump that takes international payment only accepts U.S. dollars.
Everyone's got to have dollars.
Everyone has to hold dollars in their central bank reserves for safety and for transactions, and this unique, sustained global demand basically neutralizes the weakening effect of that chronic trade deficit.
It's the ultimate counterweight. So the trade deficit is always there in the background, but it doesn't explain the sharpness of the 2025 drop on its own.
No, it doesn't. And that takes us from the technical reasons into the more existential debate, the one about hegemony.
Right, because that 15% drop gave so much oxygen to the narrative that the U.S. empire is collapsing and the dollar's reign is over.
This is where we get to the geopolitical challenge, the challengers who are looking to leverage that weakness.
And the core of that anti-dollar argument often starts with the petrodollar. Can you explain that concept?
The petrodollar system is the idea that the U.S. locked in the dollar's supremacy decades ago by making a deal, essentially, that oil, the world's most critical commodity, would be priced only in dollars.
Okay.
Since then, critics argue the U.S. has used the currency as a weapon of war. Through sanctions, they can block entire nations from the global system, forcing them to comply.
And what about the criticism of exporting inflation? I hear that a lot.
That's key. When the U.S. government spends trillions more than it earns, it creates a huge supply of new dollars. That inflation doesn't just stay in the U.S.
Because the dollar is the global currency.
Right, so those excess dollars circulate everywhere, raising costs for anyone who has to hold or use them. And that creates a lot of resentment.
Which leads us straight to the challengers, the BRICS nations. Brazil, Russia, India, China, South Africa. They're presented as a very real, very calculated threat.
And they are taking proactive steps. One of the biggest strategies our sources cite is the mass accumulation of gold.
Especially by China and Russia.
Especially by them. Why gold? Because it's the ultimate counter asset to the dollar, it's universally accepted, and no single government controls it.
So they're building up an alternative reserve.
They're building an alternative, and they're also trying to bypass the global banking plumbing that the U.S. controls.
You mean the SWIFT system?
Exactly. SWIFT is the messaging system for almost all global bank transfers. It gives the U.S. incredible oversight and sanction power.
Which is why China's pushing its own system, CPS.
Correct. CPS is their attempt to build a parallel track to get around U.S. oversight. If the BRICS nations can start settling trade outside of that SWIFT and dollar framework,
Then the structural demand that props up the dollar starts to get chipped away.
slowly but surely.
What's so fascinating here is how this whole conflict is framed. There are two very stark, opposing viewpoints.
Let's lay them out. Viewpoint A, which you often hear from Western financial institutions, is that the dollar is basically invulnerable. They say its power is backed by the US military, its incredibly deep and liquid bond markets, and just the sheer difficulty of creating a viable replacement. They say any talk of collapse is, well, it's just premature.
So the argument is that the US military is the dollar's true backing.
Yeah.
That's a powerful argument.
It is a cynical one, maybe, but powerful. Then you have viewpoint B, the more doom and gloom outlook.
And no empire lasts forever.
Exactly. They say the decline is just pure mathematics. They point to the US debt, tens of trillions of dollars, and say the shift in global economic power makes the dollars fall a certainty. Not a possibility, a certainty.
That is a high-stakes game. But let's step back from the philosophy and look at what the forecasts actually say for the near future.
Right, let's bring it back to the data. Synthesizing the drivers of the 2025 drop one more time. The dollar lost value because the Fed was lowering interest rates because of this worsening perception of U.S. government finances, the debt and the deficit.
And looking ahead, the short-term forecast is not great for the dollar strength. The estimates I saw say the dollar index will keep falling over the next year.
That is the consensus, yeah. Experts are estimating another 5% drop, maybe more.
Why? What's the thinking there?
Because the expectation is the Fed will probably continue lowering rates to help the domestic economy. And unfortunately, the problem of the government's financial management, the debt, is also expected to just continue on its current path. The technical weakness is forecast to stick around.
So we're looking at a sustained period of a softer dollar. But, and this is the big, but despite all this, what is the long-term consensus from our sources?
This is the real twist. The sources state pretty emphatically that the dollar is not expected to collapse or lose its global hegemony anytime soon.
Really?
The forecast is that it will continue to dominate world finances for many decades more. The deep infrastructure, the liquidity, the structural necessity, it's all still unmatched.
That is the ultimate twist, isn't it? The immediate data looks bad, the challenges are real, but that structural role, its world reserve status, that's its ace in the hole.
It's a paper cut, not a fatal wound. That's the thinking.
Wow.
Confidence, interest rates, and debt drive the short-term value. But that unique reserve status, that maintains the long-term dominance. It's a tension that is going to define the global economy for years.
A truly fascinating deep dive. We've covered the technical reasons for the drop, the debt crisis, the petrodollar argument, and the strategies trying to dethrone the dollar.
We've seen the weakness is driven by policy choices, interest rates, and spending, but its fundamental position remains firm, at least for now.
But the question remains, if no empire lasts forever, and the dollar does eventually lose its standing, which currency or asset do you believe will eventually replace it? Will it be a Chinese system, a BRICS currency backed by gold, or something we haven't even seen yet, something for you to think about long after this deep dive is done?